Time to check in with Amanda Lang. She is the business anchor at BNN Bloomberg, host of Taking Stock, which you can hear on the Iheart Radio network. And, of course, joins us more often than not on Friday afternoons. Amanda, we have to start with the really big news in business, at least as far as you're concerned. Taylor Swift is in Toronto, first of 6 shows last night, and you were there.
I was there. It is a spectacle. I mean, I'm a big fan. I've been a fan for years. But even if you're not a super fan, it's something to see because the performance itself is obviously incredible, as everybody's talked about. But just the energy in the room, Aaron, I have to say, I mean, it was the Rogers Centre here in Toronto, packed to the gills, full of people with the most positive energy and vibes I've ever felt. I don't want to get all woo-woo on you, but wow, it felt good to be in that room.
You know, it's funny you say that. I was talking to someone who's actually heading down to a show today for tonight's show, I guess, saying she talked to people last night, and even people in bars and restaurants where people perhaps went after the show, said the crowd there completely different from what you'd expect after a concert. Everyone is just, I think her words were, so nice.
It is and people have said it's obviously a lot of girls and moms, women and children. And so there's sort of that aspect to it. There's something wholesome going on, but it is just a really positive energy, I have to say. And I was just on a flight back from Winnipeg yesterday, and it was full of people going to the concert. And there's just kind of a camaraderie about it because it's an event, right? This is something we haven't seen. So whether you're a fan or not, it is a bit of a phenomenon, and it's fun to be part of.
Yeah, but of course, there is a business aspect to this. I think what they say, the economic spin-off here, roughly $300 million. That's nothing to sneeze at, and I'm sure Toronto's happy to have it.
Absolutely. It's just $250,000 at the least, and that's, of course, direct. A lot of that will be government taxes as well, so the governments are happy. And the other thing to remember is it brings people to the city. I mean, these are not Torontonians going to this concert. They're people from, as I say, Winnipeg. We met people from Chicago last night. The arena was full. It's funny because Taylor Swift plays to the crowd very well, and she said, this is why people love Canadians at one point. And I wondered how many people in the arena or in the place are actually stadium are actually Canadians, because so many people travel for these things. But it's and maybe they'll come back is the point. It kind of is a shot in the arm for tourism, and maybe you get people to visit again. Yeah, absolutely. All right. So look, one of the issues here, as far as Canada is concerned, we talked about this last week, I think, right? The Canadian dollar continues to fall against the U.S. dollar to the point where we're now beyond 4-year lows. You kind of wonder where the bottom is here. Yeah, and part of the problem is it really has to do with what our central bank is doing versus what the U.S. central bank is doing. We obviously are cutting our interest rates, and the Fed has followed along as well, but there's a bit of a differential, and because their economy is so hot, there's now this sense that they may not be able to lower as much as us, and so then you get this gap where our dollar is sort of less valuable relative to theirs. That's good and bad. If you're an exporting business, it puts your goods on sale. So there's some businesses that actually do well. If you are buying things in U.S. dollars, it's a problem, and that's true for travelers as well. So all those Canadians that go down, the poor snowbirds that were already dealing with affordability and inflation issues, now are going to be hit with the fact that their Canadian dollar won't go as far. But overall, we are an exporting nation, and so it's not a terrible thing. And some of our most important goods, like oil and other resources, are priced in U.S. dollars. So we keep our purchasing power at that level. Yeah, what did you make, by the way, this week? We know that with the Donald Trump administration about to come in, and we know his stance on China and tariffs. What about Canada? And I'm trying to remember which politician said it, but having to do with the fact that maybe it might have been Doug Ford, I guess, in Ontario, about creating our own bilateral agreements. What did you make of that? Yeah. I mean, what I make is that Canadian officials are trying to get in front of what they expect Donald Trump is going to do, which is take a super hard line on Mexico. Our North American agreement is up for renegotiation. That was the thing that Donald Trump managed to put into it when we renegotiated with him last time. There's a 2026 sunset clause. So we know we're back at the table. And we also know, because it's been telegraphed, that the Americans are very worried about how Chinese goods and investment are coming through Mexico, kind of a backdoor entry into our North American trading agreement. The U.S. doesn't like it. They've decided to target China. What I'm seeing is Canadian officials saying, hey, Trump, we're going to be on your side. We're going to play nice. And if that means kicking Mexico to the curb, we're going to do it. I'm a bit disappointed in that, Aaron, if I'm honest. I wish that we were a little bit more protective of the NAFTA, of the whole North American trading zone, but maybe they know that that's just a non-starter, and in order to keep our bilateral trade agreement with America, we have to do it. I don't know, but You can see why Doug Ford would say it, because his province is the single biggest exporter to the U.S.
Right.
Ontario and Michigan are the biggest trading partner we've got because of the auto industry. So you get why he would. I wish the feds would stand up a little bit more for Mexico as we head into this round of negotiation.
All right. I want to take two more things before we have to get out of here. Number one, Canadian home sales. Maybe this is a surprise. Highest level in more than 2 years.
Yeah.
Yes, we've had a string of interest rate cuts. Is that what's responsible for this alone, do you think?
Well, it looks like it. It may just be people trying to take advantage of the rates coming down. 7.7% was the year-over-year increase for October. And so that is big. Now, we did see the price slip ever so slightly on a national basis, but it could well be that as people are able to go and finance at a slightly lower level, they're feeling better. I would just put a little asterisk on this because one thing that we're definitely seeing is, I don't know if you saw this separately, but the bankruptcies in this country are also rising. And some of what we're seeing are people who are unable to manage their mortgage resets. And that will continue. And so you might see housing activity for people who can't afford to stay in their home. That's not great. That's not what you want to see. So if that's what's going on, that's not very healthy.
That kind of the idea where a bank, if you can't make that mortgage payment, is repossessing that home and then selling it at a lower rate?
Well, we don't see a lot of repossessions in this country just because it's so it's sort of technically burdensome on a bank to do it. So they don't usually do it. But you could see somebody trying to sell their house to get out from under a mortgage they can't afford, which is something that happens. We saw that in 1991 spectacularly for people in a terrible way, where they had to walk away from homes because their mortgage was bigger than the value. We're not seeing that, right? Home values have held up, but just the affordability issue is real. And if wages aren't keeping up, then people just maybe trying to get out from under that mortgage, getting ahead of it.
Last thing I want to bring up, I was reading a post on X yesterday from Harley Finkelstein, who's, of course, the CEO of Shopify, who have just, I guess, blown out the numbers in this recent quarter, becoming one of the biggest Canadian companies. And he wrote this: "I'm still very long on Canada, but for real, we got to get our stuff together. We can't just stand on our past performance. We need to requalify every damn day for our place on the global stage. It's time to build." The point he's making is he thinks it's time for Canada to start, encouraging more business to come here, not just have branch offices here, but head offices here. And I'm curious what you make of that.
I mean, I love it. Of course, that's true. It would make us better and stronger. The way you do that is by having a landscape that is attractive to business. So your tax rate, the stability of your systems, we have all of that. I will say, if you want to get optimistic about what's going to happen post January 20th with the new Trump administration, we get even more attractive to business. Now, that's only true if we keep our trading agreement. So we have to assume that we still have access to the world's biggest market, but we might well see a lot of businesses wanting to locate here. So it is kind of I had this conversation last week with the head of the Canadian Business Council, and that is, this is a time of opportunity for Canadian business. Let's not wring our hands. Let's actually say, in this turmoil and uncertainty, maybe we can capitalize on this and do something about it.
Yeah, that'd be great. All right, Amanda, thank you so much. Appreciate it.
Always good to talk.
Have fun at Taylor Swift.
Thanks.